I'm joined live from Singapore by David Forrester. He's a currency economist at Barclays Capital. So, David, we're going to talk about these stress tests, but what exactly is driving the euro at this moment in time?
Well, I think there was some good news out of it. I think that the transparency level was pretty good, particularly on the sovereign debt. Of course, there are always going to be arguments over the degree of assumptions. We think the growth assumptions were pretty good. Realistically, on the markdown or the haircuts on sovereign bonds, you're not politically likely going to get the CBS saying that there's going to be a sovereign default. So those haircuts weren't really any substantial chance of getting up. But at the end of the day, we did get a bit more transparency, which was good news for the markets, but only a small one.
But David, with regard to the euro, a lot of the good news is priced in. I mean, people had expected these stress tests to really come off well. They'd expected most banks to pass the tests.
Well, we've certainly seen from our indicators that the so-called risk premium on European assets and the euro dollar cross has come in quite a bit. You've also had a fair bit of a short positioning squeeze in the euro, and we think that a lot of those factors working in favour of the euro have pretty much played themselves out. So further upside is going to be tougher from here.
Okay, and we have also seen a kind of shift in gears with investors looking more towards U.S. weakness, and then we had some better than expected data out of Europe last week, the services and manufacturing sector. Some banks are now revising upward their target for the euro. Would you do that?
Well, at this stage, we think that euro's got further downside risk. We think that the stress tests, at the end of the day, do point to the challenges that the economy has going forward. Now, FX in general, we think, will be starting to concentrate more on currency-specific fundamentals such as interest rate differentials rather than the risk-on, risk-off trading we've seen. So, and we think going forward that story is going to improve for the US.
Do you think we're seeing a choice in the markets between those that are implementing austerity measures and those that are not?
We do think that fiscal policy and austerity measures are a strong driver going forward, and there will be rewards for governments that do undertake heavy or stringent fiscal programs.
All right, David Forrester of Barclays Capital, thanks so much for joining us. Well, with the